Hello, my name is Caleb Jackson at Barbie Jackson Insurance, Vice President. I'm going to talk to you today just about a few of the basics of what a commercial vehicle insurance policy covers. We're going to go through it, just hit the highlights here, and just kind of go through what you're buying when you buy a commercial vehicle policy. The basic coverage, the main coverage you're buying when you buy a commercial auto policy is the commercial auto liability. That's the coverage that pays out if you run into someone with your truck, or you hit a pedestrian, or you hit someone else's property, or you run into a fence. It's the main source of the premium. That's where most of the cost comes from a commercial auto policy. It's also the main coverage on a commercial auto policy. It is third-party coverage, which means your commercial auto liability limit is only going to pay out to a third party, someone that you've injured, someone that you've hurt, someone else's property that you've damaged with your vehicle. You also usually have on a commercial auto policy, if you're covering your vehicle for damage, if you want us to pay for the vehicle, if you total it, your own vehicle, you would buy comp and collision coverage. That's basically what people refer to sometimes when they're talking about a personal auto policy that has full coverage. They mean it has comp and collision. Somebody steals the truck, you run into someone with the truck, you've damaged the truck in some way. We basically pay up to a certain amount, whatever limit you've given us for the value. We will pay whatever the actual cash value is of the vehicle up to that limit minus your deductible, which is usually $1,000. In Florida, you can also purchase what's called uninsured motorist coverage. Uninsured motorist in Florida in particular is only for injuries. In other states such as Georgia and I think maybe in Alabama, you can also purchase uninsured motorist coverage to pay if your vehicle is damaged by another motorist that doesn't have adequate insurance. But in Florida in particular, the uninsured motorist coverage is just additional medical coverage for you or a passenger if you're involved in an accident where you're not at fault and you're hurt, and the person that has caused your injuries doesn't have enough liability to pay for them. Florida automatically has what's called PIP insurance on the policy. It's also required in Texas and a couple other states in the nation. It's basically first-party medical coverage for you if you're hurt in an accident. It's called personal injury protection. We usually just abbreviate it as PIP insurance. It's usually in Florida, it's $10,000 in coverage. And that's just to pay for you if you're hurt. That comes out first before it goes to the other party's liability or before you go to your health insurance. MedPay is a similar coverage. As to PIP, it basically offers medical coverage for PIP or MedPay to pay out. You don't even have to be involved in an accident with another motorist. You could simply have rolled your vehicle, or maybe you slammed on the brakes too hard and hit your head on the steering wheel when you hit a pothole or something of that sort. Anything that you do where you're injured in the vehicle, it could be, for a PIP to pay out, it could be as simple as slamming your hand in the car door. It could be a PIP claim. It basically is first-party medical coverage for you as a result of an accident. You also, usually with a trucking policy, one of the main coverages would be cargo insurance. Cargo insurance is to pay for the items that you're hauling. It's again, it's a third-party coverage. It's not meant to pay for anything that you or your company owns. It's meant to pay for the cargo that you're hauling for someone else. Auto haulers, general freight haulers, refrigerated good haulers, everyone needs cargo coverage so that if you get into an accident, you have coverage for the items that you're hauling that you don't own that are obviously of a significant value. A particular coverage to trucking is trailer interchange coverage. Trailer interchange coverage, which is also sometimes confused with non-owned trailer physical damage coverage. Both of those coverages are meant to pay for the actual physical value of the trailer that you're pulling that you don't own. Some people call it driveway or coverage. If you basically own the tractor but you don't own the trailer, you pull up, you hook up to the trailer for Walmart or whatever broker it is that you're pulling for, and you leave and you're hauling their trailer, you've got cargo coverage to cover the items inside the trailer, and then you have trailer interchange coverage can be purchased to actually cover the physical damage to the trailer itself. If you were to roll a dry-van trailer full of cargo, you would have a claim for the cargo that would be filed against your cargo coverage, and the claim for the damage to the trailer itself would be filed against your trailer interchange coverage. That trailer would then be paid, the payout for the damage to the trailer would be paid to whoever owns that trailer. There are other bells and whistles you can put on a commercial auto policy, but that's the crux of it. I just wanted to go through it real quick to kind of give you guys an idea of what the coverages are that you're purchasing on your commercial auto policy. If you like this video, please don't forget to check us out on the internet at barbiejackson.com. You can also like us on Facebook. This is Caleb Jackson at Barbie Jackson Insurance. Thanks for your time.